Hello and welcome to episode 11 of Market Maker Mondays. I'm the nomadic trader, and I thought I'd just give you a quick run through what was going on in the markets lately. So, time of recording this is actually late getting this one out, so apologies for that first and foremost. It's Monday, the 10th of October, and I've actually struggled really to try and get a proper reading on the market at the moment, partly because of family commitments. Also, partly because I've had to take a step away from the market, so I don't feel like I've got my finger on the pulse. So that's a bit of a disclaimer, really, and also a bit of an excuse. But what I wanted to do is I just wanted to get straight into reviewing where we're at now. So obviously we've got low to high with this big breakout here. So this was at the back end of the scare, if you like, all the fear from the pandemic. And then as soon as they started printing money, as soon as they started sort of doing those, I don't know, rescue measures, quote unquote, that's great for big business because it means cheap borrowing. So that's why we've actually got this big rally here. And then I think what it's done as well is it's actually built in a premium into the market. So when we have to suffer the big drawdown, the big crash of the consequences for all the shutdown, we've actually built in a premium. So if we were to have started here when we're having this massive correction, it would have really caused a lot of systematic panic. So what better way to balance the equation than build in a big premium and then go, okay, yep, so we need to make big adjustments, and that's going to cause a big sell-off. So regardless of what the sort of motive was or however it went about, we've seen this break of structure here. So this is actually a bullish order block. So we've had this big breakout here with a short retest here, and then we've created this dealing range on the big macro. And you can see that we are currently in this big downtrend on the monthly. So if you go down to the weekly time frame, that's easier to see here. So we've got these short-term rallies to induce buyers, and we're coming back down, we're coming back down. So if you go to the monthly time frame, we've got this discount and premium. So what's important to me is to try and identify where the discount levels are on the monthly and the weekly within this this area here. So you can actually see that we've got this level, which is a fair value gap. We have actually already balanced that. However, if we have a look at the top of this level, and we've actually got the so the open price on this bullish order block that was acted as a good level. So I think this is going to be a big draw on liquidity. But in order to do that, first of all, we need to come and close in this fair value gap here. So we've got this bullish monthly fair value gap. We've already traded into that. And then on the weekly time frame, you can see how we've actually closed the market here. So ICT teaches that when you have the sell side liquidity taken below an old low like this, you can do one of a few things. You can either expect a retracement and consolidation, or you can expect some consolidation around here. And then there are situations as well where you've got a lot of momentum. So you've only got a short pullback and then an extension. So this is more like a Judas swing to come in and to take this. So what's on my radar really is we're definitely still bearish. We're going to be bearish for some time. And that's actually going to be led by the macroeconomics that we're all currently facing. Global meltdown, basically. If Alex Jones was to sort of have a feature on here, I think he'd be absolutely going batshit crazy. So we've already traded back up into this weekly fair value gap, and we've traded back lower. But that's not to say that this candle here is a continuation, because until we see further confirmation to come back down lower, then we do need to consider the fact that we could consolidate here, or we could actually trade back up higher, because this is quite a big leg down considering that we've taken and swept this low. So where we're starting on the monthly time frame, you can see that we've actually got this bullish order block here, which is bang on the 50% mark. And I've just had a quick look at ICT's YouTube channel, and he's highlighting 4,000 on the nose. So what I did was before, no, it's not, sorry. $3,400, which is there, okay, and that's actually the top of this rejection block, which is the high of this overall bullish order block. And then you've got your 50% mark there, and then he's saying that his long-term objective is 2,900. So what I actually did before jumping on this video, I don't have a great reading on the market at the moment, as I've already said, so I thought I'd go and see what ICT was thinking, and then I've put these two levels on my chart without anything else on there, and then I went through and I had a look. So that's something that, I mean, I've just always automatically assumed that everybody would do. So when you have people that are trustworthy in the market, when they're actually producing content and they're shouting out key levels, if they don't fully explain exactly why, that leaves it open for you to go in and to work that out. And that's part of the learning process. And I think that's where ICT's skill really lies, because he realizes that people do need to figure this out on their own in order for the penny to drop. So I thought I would use this as an opportunity to have a look into that in a bit more detail with the rest of you. So to see what we can see really. So we've definitely got this premium built in here. We're approaching 50%. So what are we looking at in terms of a discount monthly PD array? So we have this bullish order block here with obviously the mean threshold. We've also got this fair value gap, which has already had some trading in and around that. We've also got this old low. And obviously I'm not going to keep all these levels on the chart, but let's just walk through it. And then you've got this rejection block, which is already pinpointed 3,400 as the near-term monthly objective. And then you've got the open price of this bullish order block. Then you have the mean threshold. And then you've actually got this void, this imbalance here. And that would actually, if he's saying his long-term objective is 2,900 for the S&P, what that would mean is actually coming back down into the original consolidation and coming back in to completely close in the imbalance in this range, and that would actually give us full completion and fulfillment of that there. So when we go down to refining that level, what I do is I take all of my key levels off. So we've just got the 3,400 and 2,900. So where do we have on the weekly time frame between where we're currently trading in price, and then we need to obviously identify what our weekly expansion is likely to be. And for me, it's actually unclear. So I'm not going to be paying any attention really. If we start trading up higher, then I think we could come back up into fill some of this that was left open. So we didn't get a full completion of this fair value gap. And obviously the momentum, we would say this would be our previous weekly low. So when you've got a weekly run, you're always expecting the weekly lows to be taken. So if you have a look up here, so we've traded back up into this fair value gap here. We've created candle 2 of 3 candle swing. Then this was the full confirmation because we traded lower than candle 1. We've created the imbalance. We traded back up into that. And then what we do is we've taken the low, we've taken the low, we've taken the low, we've traded back up, but we've taken the low, we've taken the low, etc., etc. And we're going to continue to expect that on a weekly basis until we see an opposing swing low or we reach a higher time frame PD array. And that higher time frame PD array, ladies and gentlemen, is this here. So this is your monthly high time frame PD array, which is a monthly bullish fair value gap. So we're trading into that. However, we know that we are still within a premium here. So you look at this here, and we've come back up. This is actually looking like it's given us the power of 3. So I think we're going to induce some buyers here, and then we're really going to push down into this area here and reach for 3,400 by the end of October. So where's that going to take us? We've got this here, this bullish fair value gap to look out for. So it's suggesting that we could have some consolidation here, but overall we are expecting lower prices. So just need to trade with that in mind. And on the daily time frame, we've had this here. So this is what I called out as an OTE. So we've traded back up here, and I was also really pleased to see that ICT had this as buy-side liquidity for the draw. And if you go back through the previous videos, and also if you have a look on the community channel, I was calling this level out before ICT has actually declared that. So little plug to myself, pleased with that. The way that I derive that is it's an old high, and you've also got a fair value gap above it, which would actually put it into a deep premium here. And we're also trading back up into the low of this bearish order block. So we've seen that momentum here, then we've had this fair value gap, we've actually come in, we've completely closed that. But if we wanted to come back up higher at the beginning of the week, then this would be the draw on liquidity for me, the buy side liquidity, because it's actually the low of the fair value gap here. If we create this as a new fair value gap at the end of Monday's trading into Tuesday, then what I would expect is something shallower than that. So something like this, buy side liquidity to be the old low of this last up candle. And then that would actually give us a trade into that, into Tuesday, and then that will give us Tuesday's reversal, and then the draw on liquidity is going to be down here. So I'm going to remove that from the previous weekly low. I will add that as my sell side liquidity. So Monday's trading at the moment, this is how it looks for me. That's no longer in question. And if we create this higher low here, that's going to induce a lot of people to think that this is going to be a continuation to the upside. So I would be expecting there to be short-term liquidity here, and then we will be looking at reaching down to that 3,400 level, in accordance with what ICT has already shared with us. So thank you for that, buddy. And I'm going to leave it there. I'm going to keep this one really nice and short. Like I say, I do have a lot going on at the moment, and I was really disappointed I didn't get round to releasing this sooner. So apologies for that. And if this is actually giving you a bit more of an insight into your trading and your analysis, then great. I appreciate it's probably not going to be as in-depth or as long-winded as the majority of the other videos, but at least we've actually ticked the box to say that it was done. So that's it for this week. I appreciate you watching. Nice short video. And the weekly momentum is to the downside, but we're anticipating some consolidation here. We could see price come back up and trade into this somewhat, which would also give us the power of 3 and also a weekly swing high if we see a continuation lower. And that, ladies and gentlemen, is all. Thank you very much for watching, and until next time, I'll speak to you soon.